you buy Bitcoin, it's a participatory activity. I mine Bitcoin, you do education and communication through your podcast. Other people write code. Some people run meetups. You could almost think about it as the Holy Trinity. Decentralization of computing power, the decentralization of information, and now the decentralization of money. Block space is absolutely scarce, just like Bitcoin is. If you're a Bitcoiner and you have an investment in a publicly traded mining company, ask yourself if they are behaving in a way that you feel is consistent. Everything will fall in price relative to Bitcoin, like with time, right? So I don't think the world can fully financialize on Bitcoin without this, what I call the commoditization of block space. Every technology must go through this curve. And a lot of times technologies get stuck. They don't make, it's called crossing the chasm. There's a great book actually by that name. The early majority always has a friend, somebody in their social circle that's an early adopter, and they hold their hand through it.
Before we get started with all the topics, for the few people that haven't seen the first episodes, for the few people that haven't come across your content, maybe give them some background of who you are and especially why you're excited about Bitcoin, and maybe also why you're excited about Bitcoin mining.
Sure. So I'm Bob Burnett. I am the CEO of a company called Barefoot Mining, and we specialize in what I call wild horse mining, but probably easy to think about it more as off-grid mining in small to medium-sized commercial sites. And I probably can get in more detail about what that means. My background's in technology, spent most of my career in the personal computer industry, especially in the 90s and 2000s. I worked for a company called Gateway, where I was a chief technical officer. And even before that, in the 80s, I was an engineer working on a lot of the very early PC designs. And been in Bitcoin since 2017. I kind of look at Bitcoin as, interestingly, I think a logical step from the personal computer. And I think a lot of people don't really probably grasp what the personal computer really was. So the personal computer was the decentralization of computing power. So prior to the personal computer, running a piece of software was a permissioned system. You had to go to something very akin to a banker or a central banker and ask for permission to run your software. And they might say no, by the way. And it was not a guarantee that you would get access to it. And the personal computer meant that now each individual, hundreds of millions, billions of people now had the ability to do whatever they wanted with the computing power. And it was really the enabling step to the internet, which was the decentralization of information. But without the personal computer, the first step, you don't get the second step. Right. And now Bitcoin is I think the third step in this kind of, you could almost think about it as the Holy Trinity, the decentralization of computing power, the decentralization of information, and now the decentralization of money. And, I think that's what ultimately changes the world, right? These three things change everything.
That's super interesting. I think maybe you're actually the first guest that brought it up, that it kind of starts with the personal computer, because that's where the entry device comes in and the internet comes after that, not the internet coming before that. That's a really interesting angle.
Yeah. I mean, I'm old. Part of that is because I'm old. You probably haven't had as many people on as old as me, but also because I came from the personal computer. And, it was very interesting. If we look at the early part of my career, so I have a degree in computer engineering, and I started working with personal computers in the late 70s, actually. There were, prior to the IBM PC, there were all these different platforms from companies like Commodore and Amiga and these kind of computers. But there was no standard. Each was independent, and the IBM PC was really the coalescing point of creating a standard, much like the Bitcoin protocol. The IBM PC set the protocol for the personal computer and allowed this thing to proliferate. But at the time, like coming out of school with a degree in computer engineering, I came out in 1986. What was interesting was my desire at the time, like most engineers, was to work for a big company, to work with IBM or Digital Equipment Corporation or a company like this, and work on the big supercomputers and the mainframes of the time, as we called them. I didn't get that opportunity, though, interestingly, and thank God, right? Because what I did get was an opportunity with what we would essentially call a startup doing personal computer work, designing very early personal computers. And because that industry was in its infancy, none of the senior engineers wanted to work on that technology at the time. It was all junior guys. And that ended up being such a blessing to me because I got opportunities to work and develop this technology that I wouldn't have gotten had I gone into the kind of the bigger corporations. But it became quickly apparent to me, this thing that we just talked about, that, hey, I actually am in the right spot, that we're going to eat them. We talk about Bitcoin eating fiat. It became very obvious as soon as I immersed myself just a little bit in the personal computer that we were going to eat the mainframe computer, that computing power was, the term we would use was moving to the edge. That's how we would categorize it at the time. So if you think about centralized computing power inside a mainframe computer or a supercomputer, it's kind of in the middle. And now what we're saying is, no, the power moves to the edge, meaning all the individual computers. And that's, by the way, where like Metcalfe's law. Are you familiar with Metcalfe's law, Robin?
We've talked about it 2-3 times, especially with the power law. It comes up quite a few times, but okay. I think it's important to still mention it, what it is, because I'm sure there's always someone in the audience that like haven't heard about it.
So Metcalfe's law came from the personal computer, and so it was people looking at the early days of networking computers together, and Metcalfe, his name was Bob Metcalfe, came up with a concept that the power of a network was equivalent or scales based on the square of the number of users of the network. So the basic concept is, if you look at a cell phone as an example, if I'm the only person with a cell phone, the user network is 1, the network has 0 value. Now the moment you come in and there's 2 people with cell phones, now the network has doubled. Well, it now has power. It makes the second one. But when a third person comes in, it's growing by the square of that number. So we went from a 1 squared is 1, 2 squared is 4, 3 squared is 9. So you can see the progression, right? Like how quickly, when you have 10 people in a cell phone network or any network, now it's a power of 100 relative to just one person in the network. And so it's the same way. It was the same with the personal computer and networking, but it's also true with Bitcoin. Like, we need users, right? We need more people. The economy has to have people, and as the economy has more people, then the network becomes more powerful.
It's a super interesting thing where we talk about social media, we talk about internet adoption, we talk about personal computer, and all those things kind of have the same networking effects. If you're the only one having Facebook, it's pretty much worthless. It's a blank website at that point. But if 4 billion people are on there, it's one of the most valuable companies on earth. The same with like all the other technologies. Do you see similarities between like the internet adoption, the personal computer adoption, and Bitcoin adoption in terms of like speed, resistance, challenges, and all those things, because you have lived through all of them?
Yeah, it's an interesting question. I might answer it slightly differently than you asked, if it's okay. But I think I've started working a bit on a book, and I'll give you a glimpse of the book that I'm working on, because it's the relationship of this very thing we talked about. So a lot of people are familiar with this technology adoption curve, and what it shows is it's a, if I can describe it to people, it's a bell curve. And in any new thing, it doesn't matter if it's a cell phone or the internet or Bitcoin or whatever, it goes through stages. And the first stage is usually dominated by what are called the innovators. So there are people living at the bleeding edge. They're usually very technologically oriented people. And for them, it's usually about the technology, whatever that technology is. This was true in the personal computer. Because in the early days of the personal computer, let's say in 1985 or 1987, they actually didn't do that much. You had to write the software yourself to make it do something useful often. And they were cantankerous. They didn't work that well. They locked up. They would stop working. They would do weird things. But to the innovator, this first group of people, that was actually appealing. And most people won't understand this, but it's like fixing it and making it work is actually part of what makes it thrilling. So if it worked perfectly, it would be less interesting to the innovator, is another way to say it. Like if you, like Luke Dasher, Luke is, I'm on the board of directors at Ocean. And I was once watching an early interview of Luke, who was a very early developer involved with Bitcoin. And when the interview asked him why he liked Bitcoin, his answer was, because it's very interesting technology. So, and you'll find this if you talk to a lot of the like real OG kind of people, that's how they started. Now, most of them have changed, and now they're interested in kind of the impact it can have on the world and the monetary aspects. But that's not what drew them in. So anyway, the innovators are the first phase of it, and we must have the innovators, but they represent maybe 1% of the total available market. And the next group is called the early adopters. Maybe it's 3 to 5% of the population. They're people that love new technology, but they don't want to debug it completely, although they're willing to work with some idiosyncrasies. These would be people maybe using personal computers in the late 80s to early 90s. This would be before Windows was prevalent, before Windows worked well, before the networks worked well. But there was some software out there. There were early spreadsheets and word processing and things like that that were useful. And the early adopters used it. And sometimes their computer might lock up or do something strange, and they would get frustrated, but they were willing to live with it. The next group is called the early majority. And the early majority will require the new technology to be useful. They don't want to play. Like they need it to do something. They also need an early adopter to recommend it. So what you'll find is the early majority always has a friend or somebody in their social circle that's an early adopter, and they hold their hand through it. And I think we're in this transition between the early adopters of Bitcoin. I think we look at we talk in Bitcoin classes a lot, right? So the people from 2009 to maybe 2012 or so, they were almost all innovators. I think the people from 2012 to maybe 2020 were all early adopters, or largely early adopters. And we started bringing in some of the early majority, but we haven't really broken through yet. To be honest, we haven't broken through yet. It's still too difficult to use, like the self-custody aspects and those sort of things. And to the degree we're getting the early majority, we're getting it now through things like the ETFs and proxy stocks and things like that. But Bitcoin must make this leap between really the early adopter and the early majority. to really break through. And then on the back half of that is the majority. Like that's where the biggest group sits. So the reason I'm going through this is every technology must go through this curve. And a lot of times technologies get stuck. They don't make, it's called Crossing the Chasm. There's a great book actually by that name. And a lot of times a technology doesn't cross the chasm. I'll use an example like 3D printing. So it's been around for a long, long time. It has little niche uses, but it never really made it to the early majority stage, and maybe it never will. Because in the early days when we would talk about 3D printing, I'm going back like 20, 25 years now, the thought was every home in the world would have its own 3D printer, and you'd be making everything from your cups and plates to your toothbrush to your, whatever, all these things, you would just make them inside your house. That was the vision, and it never happened. The technology adoption stagnated, and I think it was because we never solved that technology never solved the problems well enough and cost effectively enough for the early majority to come in. So Bitcoin needs to do this. Bitcoin needs to make this transition. I think it will, but that's our next hurdle.
It's interesting because I'm very young. I'm 26 years old. So my first time ever using a computer was Windows XP. I don't know which computer, by the way. I have no clue which computer this was, but it was a Windows XP machine. And my homepage was already Google. So I grew up knowing Google and was kind of, I don't know, I was born in 1998, so right before the dot-com bubble. I actually I'm almost as old as Google. I'm in the 9th of September, and I think Google has been founded at like 16th of September in the same year. So that's kind of where I am at. And my first time opening the computer with Google, I think that was probably around 2005, 2006. I mean, when I was like 7 or 8 years old, something like that. And this is already, I would presume, the early majority, or late,
We're in the late majority by that
late
point.
majority already. Yeah. So when you compare it to that, are we like before the dot-com bubble still, where like there's a lot of use cases still, but it's like before I even was born, like before 1998, or it's kind of hard to say exactly, but like, where would you put that?
Okay. So let me just give you some history of the personal. So the personal computer was MS-DOS based, so no graphical user interface at all. So, 1984 when the IBM PC was created till about 1991 was the pre-graphical user interface era. Okay. So then about 1991, Windows 3.1 came out. There were versions of Windows before that, but they were terrible. So nobody used them. So with Windows 3.1, we started to see the transition to the GUI, to the graphical user interface. And it was okay. And by the way, about the same time, we started to see not the internet come out, but we started to see platforms like America Online, which was a we called it a walled garden site, where you could get news and information and sports scores and stock tickers and have little community chat rooms and all that. That was coming up in that same period. So we started to, I would say we broke out of that innovator phase there, and we went into the early adopter phase in 91. And then, but it was still quirky. But in 1995, Windows came out, Microsoft came out with a product called Windows 95. And it was a major breakthrough with the usability at that point. And we pretty much, by that point, completely eliminated the use of MS-DOS. And so everybody would, when their computer would turn on, it would go directly into the graphical user interface, and all the programs were designed to run that way. Windows XP, which you mentioned, happened, I believe, 2 or 3 years later. I think it was 97 or 98. And what it did was it brought a lot of the business tools to Windows, especially on the back end side. So now connecting to networks and security and these sort of things that were important at the corporate level came into vogue. You could argue we haven't really changed, and that kind of moved us into the kind of the middle of the majority. The late early majority and the early late majority was what was going on there. And by the way, by that time, like my company in that time period, Gateway, which was the company I worked for, in the year 2000, we were the 5th biggest personal computer company in the world. We were making 10 million PCs per year as the 5th biggest. So the total market was well over 100 million PCs a year at that time period. So just to, put it in context, and meaning if you add up all the previous years, we probably had 500 million personal computers in play by roughly the time you were born. It was at that level of penetration. So where are we with Bitcoin? Well, I think we're in the early 90s period still. We haven't hit Windows 95 yet. We are still primarily early adopters with some very early adopters in. So we have a long way to go, which is good.
I didn't think I didn't start with that theme of personal computer and internet adoption, but I think it's very interesting. So I know now a lot of questions pop up in my mind on that topic. How does Bitcoin mining fit in the ecosystem when we compare it to that era? Is it kind of the network infrastructure of the internet that kind of came out? Like if you compare it to the personal computer and the internet adoption that came from that, where would you put like Bitcoin mining into this ecosystem if it's comparable to anything?
That's a great question. Nobody's ever asked that before. So we'll give you an on the fly response. I think you're on the right theme, that if I had to make it analogous to something, it would probably be the development of networking infrastructure with the personal computer. That, we're kind of I view miner and the mining ecosystem as the heartbeat and the guardians of the network. And I think that it's kind of like it's kind of what Ethernet brought to the personal computer. And of course the software pieces and the other layers that go with it. But we're kind of the glue, maybe the glue that keeps the whole thing together. So that's an interesting. It's an interesting question.
I haven't come to my first question actually, but
okay.
That's how I usually do it. But it's interesting. I mean, we talk about Bitcoin mining and the comparison to the internet theme. We've talked last time, I think, a lot about that block size being a commodity, block size being like this important piece that we have to, that sovereign nation. I think this was the theme of the last one, where we have to, that it's more important than actually stacking Bitcoin. And the last episode, it was before 2025. It was probably December 2024, if I remember correctly. So a lot has happened on the nation state level. We have Trump doing a lot of things. Where would you put, what is the current state of Bitcoin mining, the war on block size, the commodity around all of that, block space, not block size.
Yeah. So, okay. So, yeah, there's a lot's changed and a lot stayed the same. So The part that stayed the same is we're still producing blocks every 10 minutes, right? Or roughly every 10 minutes. And they're bound by 4 million weight units, which is basically the limitation of how much we can put in a given block, for those that are less familiar with this. But that roughly translates in today's terms to about 4,000 transactions, meaning there's about 200 million transactions available annually for the network to process. And the thing you're referring to, which is I view that as a commodity, that if we think about each of those blocks as virtual real estate that is owned by whatever miner wins the block, then I think it helps maybe people understand the way that I think. In other words, a miner is similar to a farmer. A farmer has a certain plot of land and maybe growing wheat or corn or soybeans or whatever their product is. And they let's say plant in May, and they know in October they're going to have a harvest. They don't know exactly what that harvest is going to be, right? So for every acre of land, they may have, I'm not a farmer, so forgive me if these numbers are off. They may say I can do 1,000 bushels of corn per acre, but maybe it's going to be 950 and maybe it's going to be 1,100. We don't really know. Just like a miner knows that if they have a certain hash power, they know they're going to have some production, and the network doesn't grow so fast that if you project 6 months in ahead, most miners have enough capability to say, hey, I know if I have, let's say, 1 exahash of hash power, I can predict we'll use the month of December as an example. I can predict how many blocks I'm going to produce. And so the idea of that being a commodity that they have to sell or that they can sell ahead of time, I think is kind of a new concept, right? And so if you think about it in the future, and I've been involved in a lot of discussions about this concept, and there's kind of two schools of thought. I'm of the mindset that for Bitcoin to mature, we talked about kind of maybe the equivalent of Windows XP coming about and it really hitting the mainstream. It requires businesses, financial institutions, governments to be able to count on having access to Bitcoin. Because if you, for instance, are an organization, I'll use Coinbase as an example, the company Coinbase, and your business requires a tremendous amount of access to the base layer, right? You have a lot of transactions you have to do. Well, if you're sitting here in July and you don't know what your cost structure is going to be for December, that's a scary proposition. So, in other words, like a company like Coinbase will probably do thousands, if not tens of thousands of Bitcoin interactions. And they don't know if they're going to pay 1 sat per VByte or 100 sat per VByte in December. So that's a big deal. And they also don't know if they will have availability to it. So if they have a lot of clients who are buying Bitcoin and want to move to self-custody, but they're prohibited because they don't have access to block space, that may prevent people from buying Bitcoin in the first place from them. So if, on the other hand, if they can now go to a miner ahead of time and say, I'm going to prepay you, let's agree on a price ahead of time for 12 sats per VByte, and we'll guarantee you that figure, and the miner guarantees them access to blocks in the month of December for that price, you can see how that will enable companies, corporations, to now get more confident in Bitcoin. The other positive is we now start sending a signal to the whole market about the future price of block space. It's much like, Robin, if I said, hey, Robin, let's you and I go to Las Vegas for New Year's Eve. And so you and I are gonna go for a 4-day holiday over New Year's Eve. Okay. Now, but if you and I wait until we get on we show up at the airport on December 30th, and neither of us has bought a ticket. We're just going to take whatever price the airline gives us on that day, and we're going to fly to Vegas. And then when we get to Vegas, we haven't booked any hotel rooms, so we're just going to go around and see what the price of hotels is and pick one. That's how Bitcoin works today. It works in that same manner, right? If I want to do a Bitcoin transaction I'm sitting here today and I know I need to do a Bitcoin transaction on December 30th, I can't pre-book it. But if I must do it on December 30th, when we get to December 30th, I have no idea what the market conditions are going to be. So if I end up having to do this transaction, let's say it's because I'm buying a property from you and we must close the deal by the end of the year. Well, I may have to pay an inordinate amount of money to get access to that block space. So that's something that I must say the fiat system does really well, right? That there's no limit to how many transactions can occur on the fiat network, and we know what the cost of a transaction is on the network, and so we have all these certainties. So I don't think the world can fully financialize on Bitcoin without this, what I call the commoditization of block space. We must be able to work outside of just the real time here and now for access to block space. I don't even think that was your question. I'm not even sure what the question was, but I hopefully communicated something of value to somebody. So.
That was amazing. And then I've never looked. I think we went into this a little bit last time, but I love the airport example with block space because I think you also mentioned it last time that we are rolling in a Rolls Royce when we transact in the base layer, and we are used to rolling in a Rolls Royce. But this will not always be the case because the block space on the base layer is a very valuable space and will be extremely competitive. And I think everyone that understands how Bitcoin works knows that those transaction fees that we now have of like, I'm paying on chain my freelancers each month and I pay like 70 cents. Like it's like nothing.
Yes. It's ridiculous. Yeah.
It's way cheaper than any form of wire transfer where I have to pay 10 euros, 15 euros for the same transaction for the same volume. To have that low of a transaction fee, that's amazing right now. But this won't be there in the future just because how Bitcoin is structured.
Yeah. I think what's hard for people to conceptualize is that block space is absolutely scarce, just like Bitcoin is. So I think most people, if you're a Bitcoiner, you understand there's only ever going to be 21 million, right? And so you can start thinking in those terms. And as you go down your Bitcoin journey, you start realizing the power of that. That, of course, using a lot of Jeff Booth stuff, like, hey, everything will fall in price relative to Bitcoin, like with time, right? That it's all going to zero relative to Bitcoin. Well, block space works the same way. And I give this analogy that hopefully will be helpful to people. If I have an apple tree, and it's the only apple tree in the world, and I produce 100 apples per day from the tree, just as an example. It's the only one in the world. When demand for apples is 98 apples per day, apples are very inexpensive because I'm throwing 2 away every day, right? But the moment 101 people want apples every day, especially if it's 101 people that must have an apple every day. Imagine how expensive it gets. And now at 110, 120, 130, but there's only 100 apples a day. I can't change the 100 apples a day, and nobody can grow another tree. Well, that's the Bitcoin block space. And so even though we live in this period, as we sit here today in late July of 2025, where block space is insanely inexpensive, there's a tipping point. And it's a very nonlinear reaction in the market because there's no ability to change the supply. I only know of two things in the world that have this characteristic, and amazingly, one is Bitcoin and one is Bitcoin's block space. But the world hasn't quite grasped that block space is exactly the same as Bitcoin, that it's this finite resource. And if you believe Bitcoin ultimately becomes a major global settlement layer, and maybe even the global settlement layer for the entire financial system of the world, and we can't change that number, you just imagine how expensive it's going to be. Imagine the competition for it. And you asked me that question before. It's why I believe that we will see ultimately nation states understanding they have to control a little bit of block space themselves, and that any big bank or financial institution must control some block space themselves, because then they can guarantee, at least within windows of probability, that they can get their transactions through.
Is that I've literally never asked that question on my podcast, which is fun. Do you have some kind of prediction, because we talk so much about prediction of the Bitcoin price, but do you have some kind of prediction of, like, in today's dollars, in today's, maybe even like in Satoshis, how expensive a transaction will be in like 10, 20 years? Or does it follow an S-curve kind of a thing where we have this hit where all of a sudden we cross over to 101 apples a day, but we can only have like 100, and then we massively shoot up till we find the price, and then we kind of like slowly find a base for what a transaction is actually costing, and then probably there's also season with it and stuff like that?
Well, if we do not change anything in the infrastructure, then yes, I think you've described the way that it is now. But what I think, this is what I think will happen, and I'll say that I've been working on a product for this for quite a while with a group called Block Spaces, where we're building this marketplace, this forward marketplace for block space, so that miners, because remember, there's two sides to it too. There's the consumers of block space. They will need a market, especially big ones. They will need a marketplace where they can go secure ahead of time and have guarantees that they're going to get access to block space at a certain price. Because you can't it's the only way to plan a business, right? Can you be in a business without knowing if you can get access to supply and what the cost of the supply is? That's pretty basic, right? So if you're a financial company, especially a Bitcoin-based financial services company of any sort, a bank, a trading firm, an exchange, or whatever, you have to have this. But the other side of it is, if you're a miner and your only source of revenue is from the block reward, well, as the subsidy is going down and the fees become a bigger percentage of your revenue stream, you need to know with some level of certainty what that revenue stream is. In a world where we have 99% of revenue comes from the subsidy, but I would say within the decade, it's going to be more like 60-40, 50-50, something on that order. And now, if those fees are highly volatile, that creates a real problem. So the solution to that is miners, like a miner like me, could go into the marketplace and say, hey, I'm offering today in July 1 block of space, 4 million weight units in the last week of December. And I'm offering the contract for 10 sats for VByte. Okay. And then the consumers of that could go lock that in. Just like if I'm growing wheat, then, and it's May, I may go sell 20% of my anticipated October harvest in May, lock in a price, right? And on the other side, there's maybe a bakery, a commercial bakery, that wants to lock in the price of wheat, so that they know for sure what their cost structure is. So Bitcoin block space is the same way. So the reason I'm saying all this is that I think we'll now be able to see forward where this happens, where the inflection points are, and they won't sneak up on us and be surprises. Because I'm sure you've seen it. You're a dedicated Bitcoiner, Robin. If you look at the last year, we sometimes see in very short windows of time, we have seen fees spike, go up very high, and we've also seen them crash. And neither you nor I have any visibility to when that change is occurring. So this marketplace, I think, is very important to, as I said, like creating the right maturity in the infrastructure for businesses to really run on Bitcoin. Now, I should point out that there are people that are afraid of this. I'm not, but some of the Bitcoin core devs have actually not been happy with me because I've talked about this with some of them. Some of them are quite have quite a bit of animosity to it because they view it as going against the core tenets of Bitcoin, of kind of a free and open marketplace. They get concerned about private mempool, what would be called private mempools, and especially for the pleb of being able to predict and get access to block space and know what the cost of that block space is. My response to that is a lot like, I'm glad you brought up the old Rolls-Royce example, is that, well, I think if we've gotten too used to this access to the world's greatest and most secure digital network for free whenever we want it. And it's not always going to be that way. And I think it's diametrically opposed to Bitcoin being successful. So our choices, I think, are we never really cross. I mean, we're talking about crossing the chasm. We never cross the chasm. We stay where we are. We're this $2 trillion asset. We don't really grow. We just kind of stagnate because we don't provide the more advanced, mature infrastructure that the real big money of the world needs to use Bitcoin, or we do adapt and make sure that the tools are there for this mature marketplace to exist.
I don't really understand what you can have against that idea. It's kind of a futures market for block space. Where, like if you want to have something in there, and it can actually serve as being more predictable. I don't like the prices of transaction fees anyways go up. Like that's like long term, wait long enough, the prices will go up anyways. So at some point people will be priced out and they will only be able to transact on the second layer and all those things. And the futures market, in my sense, just brings more predictability in there. I'm not a mining expert, but that's how I see it.
Well, I agree with you. I'm trying to be as fair as possible and say, obviously, I agree with you, but I'm just trying to also be fair and say, hey, there are people that don't agree with me, and I'm trying my best to do justice to their argument. That, I think the ideal from the perspective of those that oppose me would be, they believe the world is best when we can all show up on any given day and bid in an open market, real time, for access to the block space. But that's why I gave you the example of the flights to Las Vegas on New Year's Eve, because that's what they're essentially advocating for, is that the world exists in that fashion, where we all just deal in real-time marketplaces. And I don't think it's practical at any scale.
Interesting. It's also interesting when you think about the risks associated with, if you guarantee a price of, like, say, X, and you're like, okay, in 10 months I have that space, and it's an X amount of whatever, and then in the 10 months the transaction fee is, let's say, 10 times that. Like, okay, then someone lost on that trade, because you cannot really control how high the transaction fee is on that. I mean, I guess in the future, where Bitcoin is kind of more developed and it's more used, and there's like the late maturity already in, it will be more predictable, I guess, than it is right now, and the ups and downs and crashes are not happening that much.
Yeah, well, it's true. Well, but if we look at miners today, majority of the mining industry has moved to FPPS, right? Are you familiar with that? I don't want to get too...
No, like, what is that?
So let me see if I can be succinct. So basically, outside of Ocean, and if I didn't say it, I'm on the board of directors at Ocean. I also want to be very fair and people know my perspective. Every pool but Ocean today uses a payout method for miners called FPPS. It stands for full pay per share. And what it means is that, let's use Foundry as an example. Okay, if I'm a mining company, actually I should say a hashing company, I direct my hash rate to Foundry. Foundry is going to pay me every 10 minutes whether Foundry wins a block or not. Okay, and they're essentially, Foundry is taking the risk of whether they win blocks or not. Okay, so they have to pay me regardless. Ocean uses a payout method. It's technically called Tides, but most people would think of it as something called PPLNS, which stands for pay per last known share. But what it really means is that you only get, when you mine with Ocean, you only get paid when Ocean wins blocks. And it's essentially looking at between, let's say, block 1 won by Ocean and block 2 won by Ocean, how much of the hash rate did you contribute to the pool trying to win the block? And then you win your share of that block. Okay. And so that's the way Ocean works. Now, in the case of the ones with Foundry, Foundry is taking a large risk. And so you're essentially, as a hashing organization, you are kind of like buying an insurance product from them. Okay. And you make less. And I've proven this through my own studies. Like, you make less money as a hashing organization with Foundry than you do with Ocean. However, you have volatility with Ocean that you don't have with Foundry. And what's interesting is 99% of the world's hash rate is directed at Foundry-like or companies, and 1% at Ocean. And so the conclusion is the mining companies are willing to take less money for certainty in the revenue stream. And most of, by the way, most of Ocean's hash power is not large organizations. It's small, medium-sized miners or individual miners that mine with Ocean. I think they have more, there's a lot of reasons, but one of them is more tolerance for volatility in exchange for making more money. So the reason I took you through that was I think it will be highly appealing to mining companies to have a forwards marketplace, because they can take the risk out of the future revenue stream. And they've kind of proven this behavioral path with their choice of the pools like Antpool and Foundry that are FPPS based FPPS based.
The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from CoinVigilante represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are representing sound money to the outside world. Make sure to check out those amazing CoinVigilante timepieces down in the descriptions. I love those watches so much. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. There's this, and I love Ocean. I also have like one machine running with Ocean, but is there, and we talk a lot about this centralization problem of mining pools and the templates behind that, and kind of the reason why Ocean is there and what they're trying to fix. Is that, and I think we briefly touched on that at least in the last first episode also. I will share it somewhere because we mentioned it like 2 or 3 times. I will share it somewhere so people can see that one too. Is there this mining pool centralization problem is, I guess, still there, but did it get better or worse since like the last, I don't know, half year or 8 months since we last recorded? Is that project of Ocean and having smaller miners, and I think we also talked about the rabbits and horses. You also said that you're a wild horse miner.
Well, it's a mixed bag, so good news and bad news. The bad news is I would say it's gotten worse, that the bigger pools have gotten bigger. And a lot of that comes through the dominance of Antpool. So Foundry is, on paper, Foundry is the biggest pool with roughly 30% of global hash rate directed to Foundry. Antpool, on paper, is not nearly as big. However, we've seen 8 or 10 other pools become what are called Antpool proxies. And this thing that we just talked about with FPP, meaning they may have different names, but they all are developing the same template. as and pool, and the payout is going to the same place. So when that pool wins a block, the payout goes to the same place. So clearly what's happening is, because if you are an FPPS pool, if you remember what I said, what happens is the hashing company gets paid whether or not the pool wins a block or not. Okay. So what happens is, if you are a pool using that payout method and you go through a run of bad luck, it can be quite damaging. In fact, there are a couple cases of pools going out of business because of that very thing. You have to have a big reserve of money because you have to pay the hashers no matter whether you win or you lose. So if the luck goes against you for an extended period, it can be devastating. For instance, there's a cool pool called Titan that went out of business about 2 years ago for that very reason. So what's happened is, these pools that have gone to Antpool and said, will you financially back us? Because obviously they have a lot of money. Antpool is essentially Bitmain, right? And so they have a lot of money. So they go to them and they say, hey, will you back us so that if we have bad luck, that you will make up the difference, right? If you think about it, it's very much like a central bank. It's the same method of a central bank going to a small bank and saying, will you back us in a bank run? It's the same concept. And so Antpool says yes. However, we want to control the template. So we're going to give you the templates, meaning we're going to pick what transactions your pool is going to mine. And I don't know the exact financial, we'll take a cut as well from the pool, but now all these pools behave exactly the same. And so what's happened is, if you take the aggregate of Foundry plus Antpool and their proxies, we have a situation where censorship, or even theoretically 51% attack, becomes possible. It's not likely. I'm not saying anybody should lose sleep tonight over it, but it's very well. I think the censorship, maybe we should lose sleep over it. Maybe I misspoke there. I think maybe we should. None of it's happening to date. I am not aware of it. I don't think we're worried about white lists or black lists or OFAC compliance, but clearly the U.S. government could force Foundry, and the Chinese government could force Antpool. And if they ever worked together, the U.S. government and the Chinese government, they could really create a problem. Now, Ocean is doing well. So I might be slightly off, but about the time we did the last interview at the end of last year, Ocean had about 2 exahashes of hash power directed at it. And now it's typically in the 10 to 11 exahash range. So Ocean has had explosive growth and adoption over that time period. But still, it's only 1% of global hash rate, and we're producing 1 to 2 blocks per day. So still have a long way to go. And by the way, I also hope, like, there's other pools have been introduced, like Demand Pool, which, even though I'm a spokesman for and an investor and part of Ocean, I want others to be successful too. So Demand Pool at least has been announced, and they're going to allow block template creation as well. And so hopefully we get a little more censorship resistance from some other pools coming up too.
I mean, the best case would be if there's as many mining pools as possible that all allow for those template creations themselves. Right. Is that something that's realistic? Is there an incentive, or is there a game theory behind that being possibility?
Well, certainly it's possible. I think the way that it becomes more prolific is if the shareholders of the public companies put pressure on their company to change their behavior. And it's one of the things I would say to Bitcoiners. If you're a Bitcoiner and you have an investment in a publicly traded mining company, ask yourself if they are behaving in a way that you feel is consistent with making Bitcoin a better network. And if not, then either stop owning the stock or start using your position as a shareholder to put pressure on them to behave that way, because they've clearly shown that they do not consistently act in a manner of doing what's best for Bitcoin. And it's hard for them to do that because the market doesn't really reward them that way. They're fiat companies measured in fiat by a lot of fiat-based shareholders. So, I think asking them to behave otherwise is difficult. So, but money talks, right? And so, we just saw Marathon raise, I think it was $850 million again, like within the last 10 days, which, I guess, that's their prerogative to do, but it's kind of I think Bitcoiners have to say, what are they doing with the $850 million? And I think they should, judge the company. I'm not telling anybody to own stock or not own stock or whatever, but I think if you're a Bitcoiner, I think you have to decide where your lines are, what are your principles, what do you want to support, and make sure that you're putting your investments with those companies that support those values. And I don't mean to pick on any one company, but I would say that history has shown a lot of very bad behaviors by these public companies. The easiest one, I guess I will pick on one, kind of because they are in the process of no longer existing, which is Core Scientific, where Core Scientific went public in January of 2022. They raised about $150 million. And they went bankrupt in November of 2022. In an 11-month period, they went from an IPO raising $150 million to being bankrupt. And not only were they were bankrupt with over $1 billion of debt. And they had taken all that money that they had raised and all that debt and gone out and flooded the market with orders for equipment, primarily servers. Okay. And those that follow this closely will remember that time period as a time period where a pleb trying to buy a 100 terahash per second S19 was paying $12,000 for something that should have cost $2,500. And that was because of Core Scientific's behavior. And I think you could make an argument, it's a long story, but you could make an argument that the damage that Core Scientific did to the Bitcoin ecosystem was roughly equivalent to that the FTX debacle did. It just didn't get publicized because it didn't have the Sam Bankman-Fried media attention placed on it, but they did major damage, not only to Bitcoin mining, but to Bitcoin itself. And that a big part of the long bear market that we had and the suppression of the price was because of what Core Scientific did. So if you're out there and you're listening, really pay attention to, and you're owning these stocks, I'd say really pay attention to what those companies are doing and ask yourself whether or not it's in alignment with what you believe is at least best for Bitcoin. That's if you're a real Bitcoiner. If you're a fiat guy, then I get it.
Should individuals then get started with mining, even if it for them doesn't make financial sense?
Oh yeah, absolutely. Actually, I'm glad you asked that question, because you know the word hodl. I think every Bitcoiner's familiar with hodling, and while I think it's good, there is a negative aspect to the hodl initiative. So, because I think a lot of people have taken hodl to mean, let me go buy some Bitcoin, and I can sit back and do nothing. As long as I don't sell my Bitcoin, I'm going to get very wealthy. Okay. It's true. However, owning Bitcoin is very different from owning a stock. Even we were just talking about owning public. Well, if you're buying stock in a company, there are a group of people within that company. It might be Fred Thiel at Marathon and his team, or Dan Roberts at Iron, or whoever. Okay. But there are certain people who have taken on a fiduciary responsibility and a legal obligation to do their best to give you a return on that investment. But who is that in Bitcoin? When you buy Bitcoin, who is it that has the responsibility? The answer is there's nobody, right? So whose job is it, as you're hodling, to secure the network? Whose job is it to promote it? Whose job is it to make the user base grow? It's you could say it's nobody's job, but I would actually say it's actually everybody's job. That when you buy Bitcoin, it's a participatory activity. I mine Bitcoin. You do education and communication through your podcast. Other people write code. Some people run meetups. Some people give books out to their friends and family. Some people run a node. Some people run a miner. So I think you should do as many of those things as is within your capability, and that you should think of Bitcoin as a participatory activity. And I would argue that, like, running a node and maybe running a small miner, even if it's a 1 terahash per second BitX, would be kind of almost the minimum requirement. And some people are going to take offense what I'm about to say. If you do none of those things, you're selfish. You are asking other people to do all the work while you generate wealth, and that's not fair. So, if that's you, go look at yourself in the mirror and say, what can I do so that the gains I get from the Bitcoin network that are something I've made a contribution to? Because I think you look at it as like a citizen. I think of myself as a citizen of Bitcoin. And if you're a citizen of a country, what things must you do? Well, you vote, you go on jury duties, you maybe serve in the military if called upon. Like, there are certain things you must do as a citizen, right, for that country to sustain itself. And I think it's the same thing with Bitcoin. There are certain things you must do for Bitcoin to prosper. Because I think our biggest attack vector, my biggest worry, is lack of participation. The growth in nodes versus the growth in the number of users is horrible. We've had almost negative node growth over the last 5 years at a time when we've had like 5x the number of Bitcoin users. That's ridiculous.
Actually crazy. Is it the first 1%, like the first 1,000 people coming to Bitcoin are very different to the next 100,000, and then the first 100,000 are very different to the next million Bitcoin?
Yep. Right.
Is that kind of maybe like a problem, that we kind of lose the core ethos of Bitcoin, and people are very focused on like treasury companies, number up technology and all this, and don't really care about freedom. There's mining companies that take care of those things.
Yeah, I think you've hit a really important aspect of it. But I also blame some of the, I'm glad we went through the innovators and the early adopters and the early majority, because I think you're right. And I think with any company as it grows, or any group of people as it grows, maintaining the culture and the ethos is one of the hardest things. Like my company Gateway, which I mentioned before, we were founded, I think it was in 87. And by 2000, we had 25,000 employees. So in 13 years, we grew from 0 to 25,000 employees, 10 billion a year in revenue. This is in 2000. $1 billion a year in profit, making 10 million PCs. Well, and we went from a small company in a small town in Iowa to having these 25,000 employees all over the world. Well, you know, what's really difficult is maintaining the culture and the ethos of the early people in the company and keeping it through the whole thing, right? And now we're dealing with different cultures and other things on top of it. It was very difficult. And you could argue that ultimately the company failed. It got bought by somebody else, but it ran into some hard times and it failed because it couldn't keep on the growth path and couldn't solve that problem. And it's really hard when you're in a position where it's happening so quickly too. Because if it used to be that companies and industries would grow very slowly over decades, but in this world of technology, they can grow from, like you talked about Google being the same age as you. Well, you know, in 26 years, Google became top 5 biggest companies in the world. But interestingly, if you look at the top 5 companies in the world, I believe only Microsoft is basically materially older. Everything else is much, much younger. So these companies are all facing that problem of growing quickly, and my hat's off to them for being able to accomplish that, but most can't. It's very hard. So yeah, Bitcoin has this problem of how do we maintain it, and I think that's partly why I'm pushing on this, because I think a lot of especially the early adopters, I think have failed to. They've sold the number go up. They've sold this, you know, they've sold Bitcoin as an asset, but they haven't sold Bitcoin as what it really is, which is a network and a monetary system and an ecosystem. And the fact that they don't run nodes and they don't run a small miner is, I think, great evidence of it, because if they looked at it as something other than an asset, they would understand how fundamentally important that is for them to be doing.
That's super interesting. I could talk like hours on that topic, but it's just an super interesting topic. And I think I told you this on my first podcast with you. You kind of got me started a little bit with mining, and I'm continuously going down my rabbit hole in mining. And I think it's super interesting and super important to go there. I've done a small thing, run a one miner S21, and have it with Ocean. But I have to do a lot more. Like I'm just tinkering. Like I'm like just dipping one of my small toes into mining, and it's great because I've experienced that you learn about what Bitcoin is and how Bitcoin works way better if you understand this Bitcoin mining thing. And weirdly enough, Bitcoin mining is such a fundamental part, and I and many other Bitcoiners ignore it. It's like, and it's like, we talk about Austrian economics, we talk about philosophy, we talk about all those things. And then like, yeah, there's this mining aspect. Yeah, there's like some hashing going on.
Yeah. Well, first of all, congratulations and thank you for participating. Because I think that, as I said, you know, you're doing what an appropriate citizen of this community should do. And that's wonderful. Plus, you know, you run this show and you're helping educating a lot of people. So you're going above and beyond. That's wonderful. I do think, and some people have taken offense to this, I do not believe that you can understand Bitcoin until you understand mining. And some people take offense at that, but say, no, I don't think you can. Like we talked about a lot of things today, could talk a lot more about them, but whether it's template creation, where Coinbase payouts go, how the protocol actually works. You learn these little subtle things that are amazing. Like, I'll give you an interesting fact that I think very few people know. So, we talk about the release schedule, right, for Bitcoin, right? And they'll ultimately only be 21 million. However, did you know that when you produce a block as a miner, the subsidy is optional? So you probably think that, like, right now, 3 1/8 Bitcoin are part of the subsidy, but it's actually optional for the creator of the block template to take it. That if I create a block template, I could decide to only take 2, let's say. And if I take that 2, the 1 1/8 that I didn't take never get issued. They never go into circulation. And now, would I do that on purpose? Probably not right now. But this has actually happened. I think the count was 29 times in the history of Bitcoin. The person creating the template didn't take 100% of the Bitcoin that they had coming to them. So when we talk about the 21 million limit, I'm going off the top of my head. I think there's something like 30 Bitcoin that were not claimed at the time the block was produced, and they can never be claimed. So I just bring this up. It's a little oddity, but most people, I think, in other words, another way I'm saying it is, right now we're right at about 19.9 million Bitcoin issued. There's no guarantee the next 1.1 million ever get issued. That's optional, which I think is a really interesting thought, right? That we could, like the mining community, if the fees were super high right now, the mining community could say, hey, you know what? We're never going to issue these last Bitcoin. We'll just really squeeze the scarcity. It's highly unlikely to happen, but I just point that out because I think that people that think they understand Bitcoin, and by the way, I don't, and I'm pretty immersed in it. I'm still learning things. There are still aspects of it that I didn't know about, still insights. I'm still continually amazed by Satoshi's brilliance in the way that he created this thing. And anybody that, the Dunning-Kruger effect, do you know what that is?
I heard about it, but I don't know.
Basically it's this concept that many people have a tendency to get into a topic. Could be any topic. Could be astronomy or Bitcoin or psychology or whatever, and they gain a little bit of knowledge and they think they're an expert. And later on, if they keep studying, they realize they know nothing. And so, but there's a whole bunch of people who get stuck, who've put in a very small amount of effort into understanding a topic, and they think they're an expert. And they're the hardest people to deal with because they don't know what they don't know. And I see a lot of that in Bitcoin. I think a lot of people think they have it figured out. And especially people looking at it only through the financial lens. They miss out all this stuff that we're talking about.
I was in Bitcoin for almost 4 years before I started the podcast. So I owned Bitcoin almost 4 years before I even started the podcast. I was 1 year before the start of the podcast already on Twitter, had like 7K followers and interacted with community daily for a year. And I can 100% say I had not a effing clue about Bitcoin before I started the podcast. I'm now 553 episodes in, and I today learned that it's optional to take the rewards, which is fascinating for me. I mean, I was aware that they can choose to send it to an address and just throw away the keys and then burn the supply also in that way. But I wasn't aware that you can literally opt out of that and then really basically burn the supply of the maximal supply of Bitcoin and then therefore make it scarce. I've literally never heard that. So it's fascinating how deep the rabbit hole goes. And I do a daily interview on Bitcoin. I still learn new things every day.
Yeah. Yeah. Well, me too. Like I said, I'm continually learning, and it will evolve too. You know, there's I've become really interested in the quantum and the implications of quantum to Bitcoin. And so it's an area where I'm trying to study. I'm trying to understand a lot more of the BIPs that are kind of in the queue and which ones I support. And, you know, so we won't stop. And by the way, I think the quantum thing is probably just absolutely fascinating. And it's going to be a real test for the community as to whether or not it can find a way to coalesce and agree on something that has not just very deep technical implications, but huge ethical and moral implications. And I don't think, I mean, maybe it got tested a little bit during the block size war, but it'll be an even bigger event for the community to figure out and see if it can resolve. Now, I'm not telling anybody to freak out. There's, you know, but it's okay. But it's going to be a really challenging exercise for us to go through. And as I said, there's how we solve it technically, and then there's what path will we take. Because are you familiar with this? I don't want to cover something you've maybe covered in other podcasts.
I did the quantum thing. We never really covered like that. This is something that comes up like right now in an episode, but I have yet to produce an episode fully packed just with that one topic. But yeah, like of course it came up in the 500 episodes once or twice.
Yeah, I figured it did. And, you know, to summarize it, we obviously can't cover it all here, and it would require other people too. It's such a deep, broad thing. But essentially what happens is, you know, first, is the quantum threat real? And I don't think it's, my opinion is it's unlikely to be a short-term threat. Very little to worry about. The window is probably the 5 to 10 year window, in my opinion, where we have to worry about it. I still don't think it's even likely to happen in that window. It's probably beyond that the threat, but we have to be in front of it, right? We have to make our decision and decide how we're going to handle it well before the attack. Well before the technology develops. Now, at some point in time, whether that's 10 years from now or 100 years from now, then when quantum develops to the right level, it can break some of our algorithms. And it will not break the mining algorithms, most likely, the SHA-256 part. It will break the elliptical curve digital signature stuff, which is the way certain addresses are generated. And without going into too much detail, essentially, a lot of the more recent addresses are not that exposed. So if let's say I sent you some Bitcoin yesterday, Robin, it's unlikely that is exposed. But Satoshi has, from his early mining efforts, he has a lot of Bitcoin that are exposed. Essentially, all of what we believe to be Satoshi's coins are exposed. There's about 1.7 million in total between him and other people that are exposed. There's another 5 million or so that have exposure from other address types. So the early Bitcoin was held in what are called P2PK, pay to public key or pay to public key hash addresses. And those are the ones that are really exposed. So this is where the moral, ethical questions come in. We say, well, do we know if Satoshi's dead or alive, or has Satoshi transferred control of those keys to some third party? Or maybe they're even in a time-locked thing where they're with a lawyer or in a vault, the private keys to unlock them, and he doesn't want them revealed until the year 2050, at which he donates them to some charity. There's all kinds of different possibilities, right? However, if a quantum computer becomes available, it could, in the current system, if we do nothing, it could, in the matter of a handful of days, essentially acquire all of Satoshi's coins. I don't use the word steal because it's not really the way Bitcoin works. The way Bitcoin works is he who holds the keys has access to whatever is associated with those keys. And so it's not, a lot of people would say it's not really theft. It's just they have the keys, and there's no way to prove if it was Satoshi or somebody else that was moving them anyway. So there are proposals that say, well, let's lock or burn Satoshi's coins before quantum gets here. So let's take these 1.7 as an example million coins. And one proposal is we just burn them. We move them to an address and throw away the key, maybe a way to think about it, right? Or we send them to the Genesis block, which is on, make them unspendable. There's different things that we could do. Okay, so that's one path. But obviously, if Satoshi's still around and had wanted to use those, well, that's a big problem. We've really violated his property rights. So a second avenue is there's a group of people who are worried about the security budget and whether the miners are going to make enough money. So some people say, well, let's take the 1.7 million and change the subsidy schedule and give miners more opportunity to make money. Either, double or triple the remaining subsidy release schedule, or do something that extends beyond 2140. It's a second proposal. Third proposal is, of course, do nothing. Just let it happen. Another proposal is let's restrict the speed at which somebody can access those coins. So let's say only one block per day that has those coins can move. So they might be able to go get 80,000 of them from one address, but as soon as that happens, we would know, and we could take a secondary course of action. Some say, well, we'll only let one transaction per block move those coins. But by the way, all of these solutions or potential mean that we're violating the property rights of Satoshi or somebody else. So it's very, very tricky. The ones that restrict the rate at which they can be moved, for me personally, where I'm sitting today, are a little more amiable to like burning them or putting them into subsidy. I view those as really non-starters. But it's a fascinating discussion. I'm sure there are more ideas will come up. I think about it a lot myself, trying to think of some other way that we could do this to make it, but there's a lot of arguments to be made that we just do nothing, that we let it happen. And if the owner of the quantum computing power that gets the coins, let's say they get 1.7 million coins, and there's some fear they would flood the market and sell them, but there's no guarantee they would actually sell them. They might just move them to a different address, and they hold the keys, and now they do the exact same thing as Satoshi. So anyway, fascinating topic. It's going to be at some point as the proposals start coming forward. Those that are interested in it, there's a BIP called BIP 360 that has some of the technical piece, and there's a project called Hourglass that you can Google. There's a guy named Hunter Beast, one of the devs, and I've had the chance to get to know Hunter and work with him some. He's doing really good work on this, but there's a whole bunch of us who are fascinated by the topic, and I think trying to help come up with a great path to solve this.
Yeah, I think And the discussions right now are still kind of on the low end. So like the closer the real world threat, the short-term threat that you said you don't see now. So on Quantum, I can only like ask people that are really smart on those topics and like, okay, what do you think? So I personally don't have an opinion right now on that. So I have to verify and like really have to dig deep. It's another aspect of that. But from what I can see, the real short-term threat isn't there yet. And as long as this isn't there, as when the medium short-term threat, the short-term threat comes slowly in, then I think the discussions will come out quickly and very prominent, and there will be some figures in there, maybe in a similar sense than the block size wars, maybe even more as you teased it. It's always interesting when the Bitcoin community comes together and kind of fights on something, because there is no CEO or like head or like somewhere like that makes a decision.
Yeah, it'll be fascinating because obviously if somebody comes up with an absolutely brilliant, elegant solution, then maybe we all just kind of kumbaya and, you know, we're all together, but that's unlikely. And I think we're going to see much like the block size wars, but in a much different, we're going to have the dev community, which tends to be very technical in the way that they think. We're going to have all these now very large holders of Bitcoin, BlackRock and MicroStrategy and, you know, companies like that they're going to have a very big voice, clearly. Of course, we're going to have the plebs, and I'll go back to the nodes. You know, where do the node runners go? The block size war was, I would say, kind of won by a combination of the node runners and the exchanges to a certain degree. I mean, ultimately, what the exchanges did and what they called BTC was a big part of who won the block size war. But the nodes were probably the biggest thing. And so, you know, we'll see if, I will say this, if people don't run nodes, they don't have a voice. Like if you're a pleb out there, and most of us at some level are plebs, right? So you have no voice, you have no vote if you don't run a node. And by the way, it's even better if you mine also and you create your own templates. And, you know, because we will most likely signal whatever decision we get made about a protocol change is usually signaled through the miners. So the people that create the templates usually vote for, they usually vote for. That's the way it usually goes, is you signal that you wish to support the change by doing something in the way that the block template is created and the block header.
Fascinating, Bob, to talk with you. I could literally go on for hours, and every episode, there has been 500 plus episodes, and there's only like maybe 20 where I went over the 1.5 hour limit, and I have went before you over that because it's just so interesting to talk with you. I have one question that I asked each and every one of my returning guests, so the guests that have been on for a second or third time. The question: what have you learned outside of Bitcoin since your last appearance?
You know, what I've spent a lot of time doing, Robin, is reading. And I made the commitment to reread what I think are kind of all the classic books about kind of the dystopian world, you know. So 1984, Brave New World, Fahrenheit 451. And I'm almost done rereading Atlas Shrugged, that's a biggie because it's like 1,160 pages or something like that. And what I find fascinating in reading those books is that the problems of the world, which definitely include money, but there were brilliant minds who forecast like everything that we're seeing. And you know, Atlas Shrugged is at the forefront of my mind right now. And for those of you who haven't read it, or it's been a long time, it foretells a world in which we focus on the needs of society and serving the needs of society instead of letting the individual freedom be the dominant law of the land and method of the land. And a lot of that comes down to letting entrepreneurs be entrepreneurs and letting them get the fruits of their labor. And, I read these books and I see things that scare me. You're in Europe. I spent a fair amount of time in Europe. I was just there. I see winds blowing, like especially right now in the UK as an example, like a lot of the reasons, and say, have these people never read these books? Do they not see that they are playing like directly into the hands of this, even if they're well-meaning? Like, even if I give them the benefit of the doubt, if they say believe that it is a path to doom. Like there's only one way out of this thing, and it's to protect individual freedom and give people the ability to enjoy the fruits of their labor and spend their time and their energy as they see fit. That's the only way to a healthy society. And as soon as we try to have a managed society, we try to serve social needs, the whole thing fails. So I would just say I would encourage everybody, if you haven't read those books, go read them. If you've read them in the past, like I'm 61, I probably read all of those between the ages of 16 and 25. And I've learned so much, I've lived so much. Bitcoin has taught me a whole bunch too. And now I read those same books with a completely different lens, and appreciate the genius of the authors, but also their message and their warning to us is really pertinent. So I would highly encourage everybody to go. If you're a reader, go read them. If you're a listener, go listen to the Audible book or whatever. But listen to what they were trying to tell us.
Amazing recommendation. I haven't read them actually, and something that is still on my list, because I think a guest just was it 3 weeks ago actually recommended Atlas Shrugged to me, and I was like, oh, okay, now a second one, and then I guess I really have to do it now.
Yeah. Here's my recommendation to you and anybody else in the same position. And I realize not everybody's a reader, right? But go read, let's say 1984 first. It's a short read. And because Atlas Shrugged is his commitment, like it is a big, it is a massive thing, and it gets slow at certain periods. You have to kind of slug through it, but just to get yourself in the right mindset, maybe start with 1984 and build yourself up to some of the bigger ones.
Really cool. Thank you so much. We have, as you know, an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asks you the question, what is a surprising fact about yourself not related to Bitcoin that not a lot of people know?
Early in my life, I was a gymnast. And so I was very active in athletics, but I was probably best as a gymnast, and competed up through my late teens, and sport I really love and enjoy.
Crazy. Wow. Thank you so much for sharing this with us. Before I let you go, where can people find you, reach out to you, and ask you questions?
I'm on Twitter at boomer_BTC. I have a show, you see it back here, called Old Man Yells. So I do, they're just monologues, just me talking. I don't interview anybody, just me talking. And my company is called Barefoot Mining, and we, as we said, we specialize in off-grid mining sites, especially hydro and natural gas mining sites. And you can learn about us at barefootmining.com.
Awesome. Thank you so much, Bob, for being on and for taking the time. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. this content is for educational and entertainment purposes only and does not constitute financial advice.